Where should we send the ambulance?
Send it to the frickin' moon, idiot.
Hello again everyone, I hope you're all doing really well. This video is a request from a viewer and is a dive into a small cap business in the gig economy that has managed to find itself in the enviable position of being number one on the short squeeze candidates list on Fintel. That company being none other than ShiftPixy, ticker symbol PIXY or Pixy. If you want to see me put together a similar analysis for another stock, mention a ticker symbol in the comments below and I'll see what I can do. With this video, I am going to take a look at the nature of the short squeeze potential and give my thoughts on what may happen with the stock going forward. It is more of a focus on the short squeeze data and recent technical patterns and less so a look at the nature and the outlook for the company. So let's get straight into it. So first, taking a look at the shorts data, what immediately jumps out to me is that the company has such a tiny market cap. And when you consider the share price, there must only be close to 30 million shares publicly available in the company, of which the stock has about 27% of the float shorted, which is quite high, though it is worth thinking that the institutional and insider ownership only makes up 14.29%. So that makes me think that there is not a problem of ability for people who are short in terms of getting shares to cover their positions. It seems to be more of a scenario where short sellers have been holding out their positions for some time now, hence why the days to cover is quite low and the borrow fee has mounted to over 100%. Speaking of that borrow fee, this would be hurting holders of short positions in Pixy stock as they would be needing to fork out about 2% of the value of their holdings every day. Flipping back to the major shareholders, I thought it was interesting that I could not find a source that would attribute more than 1% of the company's stock to any individual or fund. And looking at the nature of the institutional holders of Pixy stock, there is only one that is out and out short, with 4 placing bets both ways and 28 being long. This makes me think that the roughly 7.5 million shares that are being held in short positions are being held by a lot of retail investors. So if you are playing the short squeeze, it's probably good to know who your enemy is. So glancing at the trading action for ShiftPixy, it seems that my brokerage service has only been covering the stock since late December. But from there, we can get a bit of an understanding on how the current short squeeze scenario has emerged. I imagine that Pixy experienced a lot of short action in late December, and as the stock price continued to slide in early January and more opportunists who I think are largely retail investors have jumped onto the stock. I think they are largely retail investors because the only recent short position by an institution was taken out in November. Anyway, now January's trade has resembled a bit of a bowl shape as the stock price has recovered. As a result, we have probably caught a number of legacy short positions out in recent trade throughout this area. Now, to put this in better perspective and to illustrate this more clearly, basically the red boxes I have placed on the diagram represent where there are definitely distressed short positions who need to cover, where the yellow box captures trading windows where there are potentially short positions still caught out. The interesting high volume of trade in recent times makes me think that most of the shorts that are caught out are trapped in these more recent trading windows, as this period is marked by significantly lower volume. I think for the short squeeze to remain intact, the stock needs to stay above the lower level of the second red box, indicated by this green line, which is roughly the $1.10 mark. If it bridges the $1.10 mark, the $1 price point, indicated with this orange line, is where the short squeeze will come pretty much totally undone. Pleasingly, the volume of trade does appear to be trending upwards, which does show support for this short squeeze. However, I would be a little bit concerned about the volume and price drop that was experienced in the final hour of trade on Wednesday. So moving on to some final thoughts. ShiftPixy, as a tiny volume and tiny float company, has tremendous ability to go absolutely parabolic as a short squeeze, much like what was seen a little while ago with Marin Software, where we had a similar sized company jump from about $1 a share and hit as high as $27 in the space of 2 weeks. So if enough retailers get on board, this stock can be really given a significant squeeze, as it is a stock which is tremendously easy to take control of due to its Pixy-like size and float, and the added fact that the share price is less than $2 a share makes it quite an appealing entry point. But we do need to keep in mind that it would appear that the majority of at least the recent short positions have been taken up by other retailers. So it's not so much a vendetta against the man, it's a vendetta against your neighbor. Just some food for thought. Anyway, What do you guys think about ShiftPixy as a short squeeze? How much higher do you think it can run? Let me know your thoughts in the comments below. Also, like I said at the start, if you'd like me to look at a particular stock, drop a ticker symbol in the comments and I'll see what I can do. Until next time everyone, may the markets trade in your favor. Cheers.